And let's let her rip. I have two computers, so I'll be looking back and forth so that I can see your questions. It might be a little bit of a lag. If you lose audio, just start sending me nasty, well, not nasty, but messages, and I'll get there. And from a resolution perspective, I am using sort of what's, I think the standard now is the 1920 by 1080p resolution. So for those who haven't heard me before, I always start with a slideshow, and then I go into the program. And there's really only two things I'm trying to accomplish tonight, two broad things. One is to teach you or show you how I use industry rotation. And the second thing is to introduce you to HGS boxes. And hopefully I can show you how I integrate HGSI and EDGERATER to the point that you guys can do the same thing that I do. I'm recording this as long as everything comes out okay. And as long as it does, then I will post it and send a link to George so he can post it in his group, and I'll post it on my blog at HGSI. Disclaimer, this is truly for educational purposes only. Anything I recommend is only in the spirit of education, should not be considered investment advice. I'm a doctor, not a broker. I'm not licensed to teach you, licensed to sell you stocks, but I like teaching. And I'm also independent. So even though I've been told multiple times that I'm sometimes too much of a homer for HGSI, I pay for it just like you have. And I pay for it because I make money with it. Now, this is a busy slide, and to those that don't know me, it's probably more important than for those that do. As I said, I'm a doctor, not a broker. I've been trading since God only knows. I know I started losing money in the early 90s when I went into practice, and like many physicians, you sit in a hospital sponsored free food dining room, and somebody you think knows something because his brother is an investment person gives you tips, and then you lose money constantly until you decide to actually learn. And so I'd like to think that I learned. And the other thing that I always like to mention, is that this guy here, Ian Woodward, he's really the guy that turned my trading into something where I consistently make money, and I can support myself. And one of his things he told me early on was, in his British accent, Jeffrey, which I won't even try to do, I'm not a guru, I'll teach you to be your own guru. And that's kind of how I like to look at all of this stuff. There are so many different people out there that will teach you how to trade, and everybody knows something. You got to listen to as much as you feel comfortable with. Take from them the things that work for you, and then create your own style, whether you innovate or you just create based upon others that you learn from. I think I've done a little bit of innovation, but most of what I've done is I've identified smart people and I've tried to learn as much as I can from them. So Ian Woodward and this guy next to him are Ron Braun. These are sort of the heart and soul between the investment philosophy of HGSI. And Ian learned much of what he did in the beginning, and he's taken it much further from William O'Neill. And I also have to give a lot of credit to Gil Morales and Chris Katcher, the O'Neill disciples, who've taken that CanSlim and taught me new things such as pocket pivots, Bible gap ups, etc. This guy here, where my arrow is Alexander Elder, and I like Alex for a number of things. You know, I use his force index all the time. He just has a good way, what makes sense to me, of looking to decide whether to take a trade or not, money management, position sizing. And I find him to be a very good teacher. This is Kerry Lavorne, his partner. And Alexander has written a number of books. I think Kerry would rather teach and trade than write books. And this summer I had the opportunity to take this picture at their traders camp. A new friend, but someone who I've actually paid for his education and his tools for a long time, is John Person. And I'll talk about John later, but John's a great guy, commodities trader. When I was starting my practice in the late 80s, now he does trades, he educates, popular speaker, happens to have an office about a mile from where I live now in Florida. And I basically go there a couple days a week and trade in the office next to him. And I learn just by being around him. But things that I really like about John that fit what I do and what we'll talk about today is top down, what's the market doing? Sector and industry rotation, what's working now? Seasonality, he looks at it a little bit different than we do with Best Choice and Magenta and others. And he's got interesting timing signals. He has his own pivots that he developed, which are part of Thinkorswim, and high and low close dojis. This is his most recent book. I recommend it highly. You all know who this guy is with the Canada hat on, George Lee. It's really been my pleasure over the last couple of years. Actually, I got to know him because I started talking to him at one of the Vegas meetings for Magenta, and I just name dropped that I was having dinner with Gil and Chris, and George came with, and we've been friends ever since. And then others that you may recognize here, Minervini and Jesse Stein, different philosophies, different trades, but they take a lot of the same knowledge and they apply it, and I learn a lot from watching how people apply it. Bigelow is a candlestick guy. Van Tharp is money management. Anna Cooling, how to read a volume bar, volume price analysis. Pascal Willane, looking for the big institutional money. And for those that are really more retired and are more interested in creating income, Ronald Grunke has a number of books on naked puts and covered calls as a way to create 10% on your money twice a year. Those are some of the people that I have had the pleasure of learning from. And if you listen to me long enough, you'll see where that comes in. Although we won't necessarily go through that tonight. We've got a relatively specific set of, I won't say challenges, but asks. I purposely hide my desktops. It doesn't look like that when I'm trading because I have too many programs. TradeStation or Thinkorswim are necessary because those are who I do most of my trading with. I trade with Schwab as well, but I find their tools a little bit more pedestrian. So I will use them because I have some accounts there that other people manage, and I have accounts that I manage there, but my analysis is done in TOS or TradeStation. Now, most of you probably don't have Genesis, but I'm now convinced that Genesis Trade Navigator is by far the best real-time platform, and how they incorporate seasonality and scanning intraday really set it apart from everybody else. From an analysis perspective, I use HGSI, EDGERATER. I'm a big seasonality guy, so whether it's Best Choice, whether it's Magenta Trader, whether it's Trade Miner from Gecko Software, and now EDGERATER, and I'll show you some of that tonight, and MarketSmith to me is sort of my backup and secondary source of fundamentals and charting. So everything I have to do is based upon this pattern. I talk about it all the time, and some people I'm sure close their eyes or do something, make a face, but this is it, man. This is everything to me. And I don't care if you're looking at a minute chart, a tick chart, an hourly chart, a monthly or daily chart, a weekly chart. This pattern occurs over and over and over again. Even in an uptrend, you'll see in shorter time frames this type of pattern over and over again. And so when I go long, I want to be going long down here in the circle, and I want to be getting out of the market at the red circle. The problem that we've been living in for some time is just as we enter that red circle, we take another run up. But I have to know where we fall, and I spent a lot of time on a webinar I did last night talking about where we are And, I think George might be more bullish than I am, but my basic plan for today, which worked out well, was to go more long. I think I talked about Intercept Pharma. Sometimes you just get lucky. I bought 30 calls of it, a little bit out of the money today. It's up $130 after hours. Sometimes you just get lucky. Now, I'm a tops-down guy, and for me, the reason for this is pretty simple. And when I say top-down, the first thing that I do, and I probably spend too much time on my weekly webinars, is I look at what the market is doing, because that's going to dictate everything. Market direction is key. And the reason why market matters is conservatively, it amounts to 40 to 45% of the price action. Now, I think it's probably 60 to 70%, but I'll be fair and just say 40, 45. What that means is if you wake up tomorrow and the futures are up 30 points because Merkel and Putin decide to go out on a nice date, all your stocks are going to be up. Who cares what group they are or what the stock looks like or the fundamentals? On the other hand, if Putin crosses the border tomorrow with tanks, then the market's going down, no matter what group you're in or what stock. So I need to get an idea of that. The market's a discounting, so I think it accounts for things in advance. So market matters. Once I decide the direction of the market, the next biggest piece is the group. And again, if the market is up tomorrow and there is something happens positive in Intercept is going to be up $130 tomorrow at the open, maybe even more. Maybe it'll sell off before the hours because they realize the news wasn't that good. Whatever. But I bet Great West Pharma and other speculative biotech plays will be up as well because the market seems the groups will move together. So I spent a lot of time on trying to figure out what group and what sector is working. And then the last thing I care about is which stock to buy, which sounds funny because I make my money in stocks. But I'd argue that I make most of my money in understanding market direction. This is an ancient slide, but I can tell you the results, if I did them today, might have numerical differences, but philosophically and directionally, they're the same. This goes back to Ian Woodward and his Saturday, once a month, Palos Verdes meeting, where every month, over 15 months, a group of people, much like the people on this call, and frankly could be some of you on the call, would make their picks for the next month. And then someone would tabulate those picks and look at performance on over 20 and 40 days. And then they would divide the market up, what was strong, what was mixed, strong and weak, and what was a weak market. And as the message says in Ian speak, the results speak volumes. On a strong market, 20-day performance on these picks were up over 100%. You contrast that to a weak market when the same people using the same investing philosophy were down between 32 and 50%. So the first message here is when the wind is at your back, you make more money. So when the wind's at your back, attack, and when it's in your face, don't disgrace and be careful because you may lose if you're overly extended to the long side. The other message here, which I think is equally important, was that the majority of the gains occurred in the first month, 20 trading days in a month, and that after the second month, much of what was gained, especially in a mixed market, gave up. On the downside, as you extended the time in a really weak market, things continued to get worse. So for those that are not position traders that may hold for many months, and I sometimes fall into that category, there's a message that perhaps a shorter swing makes sense. Now, let me just comment about my trading. I have a core of about 10 positions. Those are relatively large dollar positions. There are things I've had a long time, like Celgene for many years, Gilead, United Rentals. And what I do on those is I often will write insurance around them, married puts at times of market turbulence, because I'm hoping to pass them intact to my heirs when I pass on, and no one will ever have to pay capital gains tax on them. But I do trade around on a lot of short-term trades, sorry about that, around those long-term positions. So my long-terms are segregated, as I said, married puts, and then I'll sell calls and puts out of the money on those positions to recoup the premium from my married put. HGS boxes, the second thing, and then we're going to go into the programs and show you how I do this, introduced by Ian Woodward circa 1992. And what Ian taught us was that at market reversals off of the bottoms, buy the box stocks. And I'm going to teach you about the boxes in a second. Boxes are defined by quarter-over-quarter EPS growth and annual EPS growth. And my favorite boxes are boxes 1, 2, and 7. So said differently, if you could create this grid and create this grid on a regular basis and fill in those stocks that over the last 2 quarters compared to the quarters a year ago had 100%, 50 to 100, or 25 to 50 growth, and then over the last 5 years, 50, 25 to 50, and 15 to 25. If you fill them in, you create the 9-box matrix. Now, most of you are probably aware of the law of 72 or rule of 72, and if you take your growth rate and divide it into 72, the answer is how many years it takes to double. So, for example, if I was getting 12% return on my money, I would double in 6 years. At 1% that you'll get today in a bank, it'll take you 72 years to double. So no one's going to get rich on that interest rate. On the other hand, if I have a stock that's growing 100% and over 50% over the last 5 years, I would expect it to double in price in 1 year. And you could see the box 5 stocks double in 2, and box 9 stocks with a 25% growth rate will double in 3 years. What I find is that 1, 2, 7, and sometimes 5 are the ones that I like. So to say it again a different way, and when I put the movie up, you'll be able to stop this and take screenshots. Here is how you would construct the boxes if you were to do these manually. Now, I didn't comment on these two. A long time ago, we used to think about stocks like Gillette and Home Depot and Coca-Cola as mattress stuffers, Abbott Pharmaceuticals. They only would go up, they pay a dividend, and you could put them in a box and forget about them. But in 2007 and 8, I think we realized that even box 10 stocks can get hurt. And then box 11 is when you really are in deep doo-doo and you want to go into cash. So this is when Ian first introduced it to us. And he showed us that when he took, filled in the boxes on the leading stocks of the day, and he looked from September 11th of 92 to February 12th of 93, a bottom to a peak. 5 months, box 1 stocks averaged 59%, box 2 stocks averaged 40%, 55 for box 5, and 47 for box 7. Now, the message to me here is that when the market lifts, and a rising tide probably lifts most ships, those ships with the highest earnings potential lifted faster. Again, all right, hold on a second. I opened up the data. Didn't want to do that. In 98, 99, the same thing happened again. Now, the print here is large, so you could read it, but there were 190 stocks that met the criteria. And the criteria were basically, we set a minimum ERG, and ERG is kind of like the VST and Vector Vest. It's relative strength rank plus earnings per share rank plus group rank. Each of them can be up to 99. So the highest ERG you could have is 297. And we usually set the ERG cutoff at about 240. So there were 190 stocks overall. And overall, those 190 stocks were up 67% between October 15th and January 22nd. That's a week more than 3 months. 94, 85, 70, 85, 102%. So again, the box stocks outperformed. Then we can go more recent times. September 1st, 2010 was a market bottom. At the time, we selected ERG 255. What we got was 81 stocks that fit into boxes. Between September 1st and April 29th, so that's 4 months, 8 months total, the S&P was up 24%, great 8 months. Box 7 stocks were up 106%, Box 9 stocks were up 50%, and Box 1 stocks were up 125%. So it turns out that this is what percentage of the stocks went into the box, that it pretty much didn't matter. All the box stocks outperformed, here's their result, the S&P 500. So this is all retrospective data, but it was based upon prospective analysis. A market bottom was identified. A market top was later identified. And the boxes were created at the time of the presumed bottom. And the results are taken closing at the top. You can't retrospectively do this unless you have the data from HGSI stored outside of the program. June 23rd, 2013, these were the HGS boxes, and these were the results. Not as clean as before. All box stocks were up 16.43%. The S&P was up 6.8%, and you can see that box 1 was only up 14%. Box 7 was up only 12.8%, both of which double the S&P. And now box 4, 5, 2, and 6 actually led. But to me, the point is pretty simple. At market bottoms, build your boxes, and when you go fishing to find stocks to buy, or if you like buying a basket, buy the box. If you want to find out more of this mumbo jumbo, I have weekly, I put up a video. I post it in 2 places. My blog, you can see tinyurl.com/JAS-HGSI-blog. And my YouTube, same tinyurl.com/YouTube HGSI doc with dashes in between. You could also search for HGSI doc on YouTube, and my blog is on the HGSI site. Question about my meeting in Vegas. I said you may not like it, but I'm not going to compete with Sue. I am going to be sharing the stage with John Person coming up in a couple of months at the same incredible resort that I had my meeting at down here in Singer Island. This is a Sunday and Monday, I believe, the 11th and 12th. I might be wrong on the days, but it is Sunday and Monday of the second weekend in October. John Person is outstanding, and I'm really excited to be able to share the stage and do some of my stuff with him. Here's my email address, or one of them if you want more information. Those that are not brought here by George may not be aware that George, via Greg Mills, is going to be doing an advanced seminar in Orange County on October 3rd and 4th. We also have the PV meeting coming up in October. I have everybody's email if anybody wants to ask me. Okay. I've just been told by George it's the 3rd through the 5th, which makes sense. It usually is 3 days. I was going to do a Vegas meeting similar to my South Florida meeting, and then I found out that, not that it's anything bad, that Derek and Magenta are going to highlight Sue with her MACD work on the same weekend. And since I know we share a lot of folks, I did not want to compete. So there is a good chance that I will be announcing another meeting with John Person in Vegas, probably at the back half of the week, so not necessarily going to interfere with Sue's meeting. And then I am working on and planning a second summit the first weekend in February down in Florida. So now let's do what you came for and let's go into the programs. So the first thing I want to do is make sure I've got EDGERATER up, and I've also got my HGSI. So I guess I'll start with HGSI and talk about some of the different ways that you can do industry rotation in HGSI, and then I will show you how I put that data into EDGERATER, and then when I'm in EDGERATER, show you some really neat twists that you can do with seasonality and industry rotation. So HGSI, for those that don't know it, if you go to www.highgrowthstock.com, you will get this website, HGSI. And if you click on free 30-day trial, you will get the data and the software for free for 30 days. If you go under investing strategies, you can see my videos that I post. You can also see a number of other smarter people, like Ian has a great blog that he posts as well. And all of this stuff is free. After 30 days, if you want to continue with the software, you get to pay for it. They also have information about that upcoming meeting that I mentioned. So the nice thing about HGSI is that everything is contained within the program, and you as an individual user have no work to do. And when I say no work to do, I mean that you don't have to be worried about what's in which index, when there are splits, etc. Although nobody's perfect, and it may take George a day or two sometimes to update an index change or a split, and sometimes us users have to prompt him if he isn't aware that it happened. The source of their data is barchart.com, and right now it's available only as end of day. The next update, and George will just love me for saying this because I don't know when, but I think it soon is going to give you a intraday updates as well, which is outstanding. And it has a number of boxes up here, and I'm the first one that tells George it's not intuitive enough. But let me walk you through what some of these can do and show you how you might do some sector rotation. And also I'm going to show you how to create the boxes easily. So we're going to start in the designer view. The designer view, I like to think of it as a giant file cabinet. And that file cabinet has 3 different drawers. It has one drawer which is everything that is published elsewhere. Everything in the Amex, all the market indices you could think of, NASDAQ, all NYSE, all securities. So right now there's 8,108. I've got no filter on here. Component lists. Not only can I see what's in the NASDAQ 100 or many other indexes. I mean, I'm not sure I care, but maybe one day I want to know what's in the Amex oil index. I can also look at what makes up the components of ETFs like the Direction Bull 3X shares. These are the different stocks that make them up. So I may want to do some rotation work sometimes and ranking work within an individual ETF. Now, as I said, all of this work is done for you, including breaking out different industry groups and what's in each industry group. And we'll be using that one a little bit today. Major industries just takes a look at a smaller number of these industries. The sectors, many of which can be broken down using spiders. Sectors by industry. And so this here is sectors broken down by stock. And this one here would break down each sector into the various industries that make up for it. So as a top-down investor, I have multiple ways of looking at the sectors and the industries. If I only want to look at the major market index components, what stocks are in the NASDAQ 100, the S&P 500, my guess is, if you're wondering why it says 502, is I probably got some filters in here that I need to take out. Here's one up at the top. Market breadth, not only do you have advanced declines, when you look at it in a lot of charting programs, the advanced decline is determined just by the NYSE. Well, the NYSE is garbage. I mean, it's a great index, and God forbid I say it's garbage, but it's filled with bond things and all kinds of preferred instruments. It's not exactly telling you what goes on with growth stocks. So you can look at breadth by stock type, which is really cool. So everything in the reference groups you don't change is done automatically for you. Smart groups are tools where many of us have built-in scans that do automatic updating every night. So if I was looking for what stocks today had a green candle low, these might be reversal opportunities. I might want to take a look at them. If I want to know stocks that have a breakout, mobile breakout from a squeeze, again, this is something that's done automatically for me and updated each night. You could see the dates. So the smart groups are, and I keep going back to VectorVest because to me that was where I started. VectorVest relies on something that filters and then ranks. And that's exactly what the smart groups are doing. They're just cutting off at 25 or 50 the number of stocks. We have something under Woodward and Braun called the HGS 100, which currently only has 60 stocks. In a very strong market will have 100, but it in many ways mimics and comes close to duplicating in advance the HGS, or excuse me, the IBD 50. And then lastly, user groups are things that you create. And one of the things that Ian and Ron do is they made life easy by creating these user groups, which I'm going to use right now. So the first thing that I do, and all right, so this is the, I'm going to take a breath for a second, is this is the file cabinet. I make my groups in here. Here's some box 127 stocks, but I manipulate them in here and analyze them in the warehouse view. So let me close that and open up the warehouse view. The warehouse view looks like a giant spreadsheet, and it is. And in fact, that spreadsheet can display all kinds of good stuff. It can display earnings per share, relative strength, group rank, that ERG, high jump, which we're not going to talk about today. Does the stock have an HGS box? Accumulation, distribution. I could even put things in there like, is there a Keltner squeeze? This is our, the Bollinger inside the Keltner channel. I can put in mobile breakouts or breakdowns. So all this information, anything that's listed here, parabolic SARs, can be put into a spreadsheet that I can monitor. The nice thing is, not only can I monitor them, but I can scan for them, search for them, rank for them pretty much any technical or fundamental I can scan for and manipulate. So first thing I like to do is I usually go down to the Woodward and Braun user groups, and I go into Major Markets Plus, and I start my analysis by going to top down. And so before I continue, I want to answer a question. How are the SMART groups different from the Woodward and Braun groups? The Woodward and Braun groups are essentially groups that are built from the reference libraries. They're usually specific. That might be all industries. They might be major markets. They might be types of ETFs. And these are static. The components in these do not change, and I can manipulate them. On the other hand, although there might be some overlap in some of the choices under Woodward and Braun groups, the SMART groups of Woodward and Braun or anybody else, these will change every day based upon changes in the market, rotation, stocks in, stocks out, sectors. So the SMART groups are actively changing on a daily basis, while the user groups are, once you put them in, what's in the group doesn't change unless you manually change it. So as a top-down person, you can create the SMART groups from the Woodward and Braun groups. As a top-down guy, I will always come into this analysis here, where I'm looking at 2022 of the major markets, and I know what this view, again, I'm trying to cover a lot tonight, so I'm not going to go too far, but a view combines a filter, and the filter brought in these specific items, and then it ranks them. And this ranking is looking at mostly today. Second most important is the last 5 days, but it does look out 3 weeks. It's all price and volume driven, all technical, no fundamentals. So I see that over this period of time, Treasury bonds, the VIX, the dollar have outperformed, which is why the market was weak. Now, what's interesting, if I look at price change one day, I see the semiconductors were up 1%. The Russell 2000 and 600 today were up nearly 1%. The NASDAQ up 0.7. So small stocks clearly rotating in. Semiconductors up. Now, this may be a one-day wonder and not a big change, but I learned a lot from this. I learned the small stocks in the semis. I learned that the VIX was down 10%. And those that follow George and I know that high VIXs, it's hard to make money on a rising VIX. You make most of your money on a falling VIX. And the VIX down 10% is a substantial move. Gold and silver also on one day were down near the bottom. So I get a sense of what the market is doing. And then I want to start to look at sector rotation or industry rotation. So I'm going to go to industry rotation. So here, number 5, I have industry groups. And as you could see, I think there's one filter in here, but there are 200 industry groups that are ranked here. Now, if I want to worry about as much as 3 weeks going back, I could look at what's doing well by ranking them with T1. Well, I don't really care about what's been working for 3 weeks. I want to know what's working right now. Now, I could just go and do what's had the biggest return over one day and other commercial services. So I right-click on that, change the index group, and I have no idea what UBIC does. But I can look at this chart, and I could see that today UBIC was up 20%. It was up $4 from 18 to 22. It had a mobile breakout. not much in the way of on-balance volume changes. And I don't really like this stock. It has the fundamentals. I probably want to learn more about it. So what I was able to do here is using one-day change, I was able to look into the group that had the highest one-day change and then look at the stock with the highest one-day change there. Now, that's not necessarily a good way to look, but it's a start. Now, Service Master is one that I do like and was on it. I put in an order on it this morning. So let's take a look at Service Master. Whoops. Hold on a second. You highlight it and you double click and you'll pull up a chart. And this is not the service. There's another. All right, there must be another. This is Holdings 1. There is another Service Master that I was looking at. I'm not going to spend much time on that. It looks like it's an IPO. But basically, this is not how I do it, but just showing you I could rank these on a number of things. Now, Force Index is something I do like to rank with. Force Index looks at today's close minus yesterday's close and multiplies by volume. So the highest force will be in stocks with a big price change times a big volume. So I'm going to rank my industry groups by Force Index. So if I drop down here, Force Up number 1. So these are now ranked by 2-day Force Up. So this takes into account price change as well as, and I want to rank it by raw combo here, as volume. Major industries is all the industries rolled up, so there's nothing there. So the top performing group today was Midstream Oil and Gas Index. No surprise because KMB did a major roll-up today. Changed index group, and you got all these are the 4 stocks that are coming together in a new company. God bless any of you that own those in today. And what I typically do is I look at the top 10 groups using the Force Index, and I look at the stocks that are trading above the index. And you'll see that these are not anything that you necessarily want to play with tomorrow without doing research, but they all have big gap ups today and just a beautiful day because of a corporate action, and they all kind of look the same. El Paso also was part of that group as well. Let me spend a minute on my chart because if you're new to me, you're probably ready to turn it off. I start with this. This is my basic chart. And on my basic chart, I have, and this is really not 4, I have an 8-day exponential, as you can see here. And then I have a 17, a 50 in blue, and a 200-day simple in red. And I'm a big moving average guy. All right. I like buying stocks in an uptrend that pull back to the 50-day moving average and then get some momentum coming in. All right. So this is my basic chart that I'm going to look at. And it's got candlesticks and it's got my moving averages. Now, historically, I've used volume and then a couple of moving averages on volume to help me find when there was a big volume change. I'm losing interest in volume because volume today I don't think is the same as volume 5 or 10 years ago because of the use of ETFs and options. Dave Steckler pointed out this morning that I said last night that we had a rally on Friday on lower volume, but some of the ETFs of the indexes were actually higher volume. So I think volume might be confusing. Then I take my typical chart, and I'm a big fan of MOBO breakouts, squeezes, and PSAR. So now what I've done is I've created a mustard or yellow color whenever we get a squeeze. And then my MOBO breakouts, and let me make this kind of bigger, fire here, break down and break out. So I'm constantly looking for interesting chart patterns where I get a MOBO breakout from a squeeze moving above my 50-day moving average. The green dots are the PSAR dots. So this is now my standard look, and then I add to it some of the things that I use in HGSI. And it gets to be cluttered, but I've already told you about the moving averages. These light gray lines are the Bollinger Bands. This dark gray line is the industry group. I find it very helpful to understand the industry group. Down here, I have something called pocket pivots, which are from Morales and Katcher. Most of you are familiar. Blue is up. Red is a deep down. Light pink is a partial down. I have on balance volume, and it's, I believe, 10-day moving average. And then below it, I have the old standard volume and my kahunas. Kahunas are a movement of 24% in the light color and 40% of the Bollinger bandwidth in a given day. And in HGSI land, those have become very important to us from a momentum perspective. So up here, I've got bongos and force and accumulation distribution. Just think of those as technicals. Green is good, red is bad. I have the high jump bar, and then somewhere in here where my little arrowhead is, I've got, we close up that one because no one cares about that anymore, including me. I have viable gap ups, my squeeze, and my MOBOs. All right. So the way that I do sector rotation then is I might look at and rank by combo, 2-day force up, and the ones that have the highest force come to the top. So semiconductors, biotech. I mentioned that I made a big move on intercept. Well, my webinar yesterday, and I think last week, I talked about that this was probably getting to a point that it looked interesting, and I was looking to get into this stock. Now, it traded up today, down, and it closed here right below the 50. It had pocket pivots. You see that volume on an up day today. You see the kahuna the day before, coming a MOBO breakout out of a squeeze. And I got into this, and it was trading when I last looked after hours at $374. So sometimes you just get lucky. So I think I paid for 6 months of my shopping of toys with that one trade. I found it this weekend because I looked at biotech because it was up near the top. And again, I typically look at all the stocks trading above the index. I can buy from 8,000 stocks. I might as well buy from those that are outperforming the index. I also pointed out one that I do like, Clovis Oncology, as sort of a low-risk buy off the bottom. They had some good numbers come out last week on Friday. I know their products. They've got some launches coming. And I go through and look at the top industries and the top stocks. If I want to know what's not working, I might look at force down. And you can see today was a really strong day. And if you want to know what wasn't working, you might look in these three if you're looking for potential stocks to short if the market starts to trend one way or the other. So from a short-term perspective, this is how I look at industry group rotation. It's not perfect because 2 days is kind of whipsawed. So let me introduce you to another button. I'm going to introduce you to the ranking module. The ranking module allows me to put anything I want in the subject line. So I'm going to go to the same groups we were using just for consistency. And here I have I got to turn off my filter. I think what I'm going to filter for now is I don't want to look at any stocks. So I don't want that are less than $2.50 and 150,000 shares. And that's not going to work on industry groups because of the volume. So I'm going to take off the filter, and I've already got I'll show I have the price and volume built in. So here is a ranking module that ranks the 200 industry groups, and I'm going to talk a little bit about the different ways that we rank them. This is raw relative strength. Now, what does that mean? I got to open this up here, and it tells me this is percent change over 1 week. So this starts on Monday, and it will build until the end of the week. So this is the percent change for today for that industry group. On Tuesday, the percent change will be for Monday and Tuesday. On Wednesday, it'll be for Monday, Tuesday, Wednesday, and so on and so forth. When you get to Friday, you will lock down the change for the week. So you could look then at what were the top groups last week. And let me move some stuff around here. So last week, utilities, plastic building materials, wood building products, some of the gypsum stocks were up, air freight. And then we look at today, and what's interesting is if you look for consistency in the top 20% or 40 stocks or 40 industry groups are going to be green, you can get an idea of which ones have been working now for a while. We can see that electricity and gas marketing and trading companies have been in the top 20% 4 of the last 5 weeks of trading. Non-residential construction, printing services. So we could look at stocks by 1 week return or industry groups. Now, maybe 1 week is too short, and what I want to look at is 3 weeks. So I can change that to 3 weeks. And now, again, I can start to see performance over a 3-week period of time. So these are the top performers looking back 3 weeks of trading. And again, you start to see agricultural products wholesaler index. Each of the 3-week lookbacks over the 1, 2, 3, 4, 5, 6 weeks have been positive. And what's driving this? I guess the Andersons is driving this. So by right-clicking, and you can see the last several days, this will start to take off. By right-clicking, I can always dive into that industry group. The way that I use this is I don't necessarily play raw relative strength percentages. I go into here and I set my option at Ian slow relative strength. So history lesson is important here. Back many moons ago, Ian was teaching us how to front run the IBD weekend review on Friday. And what he helped us do was come up with an industry group ranking system that we could run on Wednesday or Thursday. So before the market closed on Thursday, we already knew what stocks were going to be in IBD because like clockwork, they went up every Monday. So Ian's slow relative strength was designed to mimic the IBD night weekend review with their group rotation. So this is looking at raw relative strength. Now I'm going to change this to relative strength so we see the 99s and so on and so forth. And what I do is I'll put my industry groups here and I'm looking for patterns. If I see something that has been mostly reds and yellows, and now it goes into greens, real estate services. Reds to yellows to greens, healthcare services. Reds to greens, agricultural products wholesalers. I am looking for things that might be rotating in or rotating out. If you have any question about the strength of those other commercial services, biofuels, other mined minerals, you could see the relative strength of these groups going back to April. So I will scan down, looking for things that seem to be changing. Clearly managed care is rotating out, green to yellow. And what was one of the three groups on the negative groups? It was managed care. Now, exploration and production also looked like it was rotating out, but Friday it was strong. So it'll be interesting to see as this week goes on, will it change? But you really don't want to be in a lot of commercial vehicle stocks when you see them going from green to yellow to red. So I'm looking for pattern recognition. Now, I don't want to spend too much time on it because it's confusing enough what I'm doing. But you could actually take it to derivatives. And what do I mean by derivatives? If I was to take a picture of the Indianapolis 500 on lap number 47, and it could be any lap, I could see what stock is in first, or what car is in first, what car is second, what car is third, and what car is fourth. Now, if I measured their speed at a given moment, they might be the same cars have the highest speed, or it might be cars that are not in first place are building up their speed. So I might look and see what's doing best for velocity, that are moving faster, although they might not be up at the top. And then if I have 5 cars that I take a snapshot and they're at 50 miles per hour, some might be accelerating, some might be decelerating. So I can also rank by relative strength, by velocity, or by acceleration. So there are a number of tricks and tools that I can do within HGSI. And the last one I wanted to show you very quickly is if I go to raw relative strength, open up this option, go to comparative relative strength, compare it to the S&P 500 over the last 4 weeks, hit OK, and then come up to the top. This shows me the performance versus the S&P 500. So plastic building material over the last number of weeks, I'm going to make this 1 now, 4 weeks was 33% better than the S&P 500. Over 1 week, so the S&P 500 would be at 100 even because it's going to have its own performance. Commercial services, today we're 10% better than the S&P. Electricity and gas marketing, 3% outperformance, 3% here. So there's lots of different things that I could do with HGSI from a group rotation perspective. So someone asked me a question if I could do a dollar, if I could divide up the market based upon dollar weighting. I haven't done that, but I'm almost positive I can. So let me show you what I would look for. I would go into all securities here. And I'm going to use just something that I call scorecard combo, no filter, all stocks. So everything's in here, all 8,000. And now I'm going to create a filter. So the question was average daily dollar market value of $5 million. I don't know the answer, so I'm going to see if there's a filter for that. So anything here, so let's see. If the answer is no, I can get it created for me by asking for it. Because I think that's a legitimate question. I think, yep, there it is. Dollar volume greater than 5 million was the answer, the question. 5, 1, 2, 3, 1, 2, 3. Make sure I got my, okay, so let's call this daily dollar volume greater than 5 million. Hit OK. So I now created a filter for that. I'm going to hit OK. And I could see that there were 2795 stocks who traded with an average daily volume greater than $5 million. Never did that before. I like that because, frankly, that's why I don't trade stocks that trade very few shares. I don't want it to be so little that George Lee's buying up the entire float of the market. And I don't want to be on the other side of the trade. So that's some of the tricks that I do in HGSI. Let me show you something that's really cool that for those of you that are seasonality fans, I think will get a lot, will really like. So I've already done this once today, so I'm going to walk through how I do this, and then it'd be great if you guys have HGSI up that you could do this with me, those of you that have HGSI and EDGERATER. And clearly when I get to the boxes, I want you to be doing this with me. I want to create a vehicle that will allow me to create indexes for industry groups in HGSI. And then I want to be able to manipulate them for seasonality in EDGERATER. And I know I need at least 10 years worth of data to do that. So the first thing that I would do is I would go up into the HGS reference groups, and I would go into industries, and this is all the industries, 200, and I would highlight it, grab it down, and put it in my user group. And when I do that, create index for these groups, now no. I've now created under my user groups something that says industries. And I'm going to rename this Web 10 years. All right. Now I want to set my index properties, so I'm going to right-click my mouse, go to Group Properties, Index, use these settings, and I want to start this so I have at least 10 years worth of data. Since I can't add, I'll go back to 2001. I'm going to hit OK. So now what I'm generating are the index groups for all 200 of the industries. This will take a few seconds. Just to warn you, it's not going to be that fast if you don't have an SSD. Now, if I click on any of these, I should get a chart. Let me make it cleaner. So I should have 10 years worth of data or more. This goes back to advertising and marketing. Now, if I did this right, I should have 10 years worth of data. Make sure I did the... All right, what did I not do correct? Let me go back here. Group Properties, Index. I think I had to hit up to all child groups. All right. So this will probably take a few minutes. But what I'm doing here is I'm building those indexes. Now, I'm going to export those index to Metastock, and I'm going to create a group in EDGERATER called Indexes 10 Years. So while that's doing its work, let me show you what that might look like. Here are industries 10 years that I created within EDGERATER. I'm plugging it into historical performance now. What the historical performance now will tell me is, from today, what is my performance over 2 weeks, 1 month, 2 months, 3 months, 4 months, so on and so forth. And if I want to know over the next month, obviously there's something wrong here on the 1244, so I'm not going to really worry too much about that one. But I could see precious metals mining are up 10 out of 12 years for 7%. Double click on that, I can look at the chart, and if I'm a seasonality guy and I want to look for something that might be seasonal strong over the next 1 month, I might look at precious metals. Retail, 10 out of 12 months up over the next month, 6% return. Communications equipment up 11 out of 12, 6% return. How about if I want to look at 3-month performance based upon the month I make my purchase? So I'm going to run this here. So if I was to buy in August and look over the next 3 months, the big winner here is engines and transmissions, but I want to find something that has percentages in my favor. So I might look at retail, 9-2 over the next 3 months, up 14%. Material handling, machinery, manufacturers, over the next 3 months, 12%, 9-2 up. Post and courier service, engineering services, 9 out of 12 years, you can see the percentage. Steel, raw materials, 14%. Right? Let's say I'm interested, here's 8% in August, 14% September to November. I might now be interested in steel and raw materials. So I can go back into HGSI and I could go down to steel and raw materials, do a right click, change the industry group, and I can now start, actually I just have to double click it here. I can see what groups are there, and you probably are well aware of what U.S. Steel is doing, but these might be things that you might want to look at as well. So these are the iron ore providers, not the steel producers who are also moving right now. For example, one that I was looking at today, don't know if I filled or not, I haven't looked, was AK Steel, which is in a big power move up. And if I drop down just some of my other toys here, see it came out of a squeeze here, PSAR supportive. If you look at this one over time, you can see that AK Steel just broke above its 200 weekly. And if I throw in bring in some more data here, you can see this stock has come from a long ways. It used to be a $60 stock. This is a Jesse Stein pick. He's been picking it for a long time. I think it's at a point now where it actually looks quite attractive and less risk. And U.S. Steel, propelled by amazing earnings per share, are just popping. All right, so once I've built, go back here, go into the right place. See if this works now. I'm just trying to open up the little chart on this guy. All right, what did I do wrong? All right, just see one thing. Is my chart window already open somewhere? It's not open. All right, of course now it's mad at me. All right, well let me skip the chart piece for a second and show you the next step. And then I'll, all right. So now you take your industry web 10 years, and I've got to do two things. I've got to create the indexes in Metastock. The way I'm going to do that is I'm going to go File, Equus Metastock Utilities, Export Groups. Now, quick information, you don't have to own Metastock to do this. All right? You create a file directory, I call it Metastock Data, and within there I have a number of different groups that I follow. Again, you don't need to have Metastock to create this. Now, what I'm going to do here is I'm going to create called Web, and notice I did not include subgroups. I'm going to hit OK, and that data is being dumped into Metastock. Now, I take the same industry web 10 years, and I go here, ASCII Utilities, Export Group as Lists, and then you're going to want to find your Documents, EDGERATER symbol list, and put it in here. I got to call that Web. Save. I want symbols and name. I don't want subgroups, and I don't want to exclude indexes. I'm going to hit OK. So now when I go into EDGERATER, you're going to see it's nothing there. So now I click on the pencil, and I want to use Metastock as my source for this one. And I want to update. I'm just going to put 20 years, as much time as I've got. Save that, hit that, and it just pulled my indexes out of Metastock. So what I did, just to review, I created in Designer a directory called Industries Web 10 Years. I created that by dragging my industry group down, and I named it Industry Web 10 Years. I then set the group properties, use these settings, equal dollar weight, start date in 2001, and I believe I applied setting to all child groups. I don't want to do that now. I then exported them. Okay, just want to make sure it worked. I then exported them to Metastock using the functionality within HGSI. Again, Metastock is a program for charting. It's also a convention for storing data. I did that by export Equus Metastock Utilities, export groups, put it in any directory you want, name it, 6,000 securities per folder, by symbol, add it to my auto update list. All right, already done. Then I did ASCII group as lists, and I put it into EDGERATER by finding my user, documents, EDGERATER symbol list, and put the name there and brought in symbol and name and did not check the boxes. Then I had to go into the group. You can do it many different ways. I could have gone into my symbol list. I could have found my industries web, and I could have gone into edit. And under edit, I want to make sure I choose Metastock to be where I grab my data from. I saved it. I updated it by hitting this, which I've already done. I'm not going to do it again. Now, you're going to get this far, and then you're going to curse me because it doesn't work, because I forgot to show you one thing. Under data providers, simple stuff. Highlight Metastock. You've got to find that folder and make sure you locate where the parent directory for Metastock data is and hit OK. That's all you got to do to use Metastock. So you can only update these indexes by creating them, which is automatic in HGSI when I do my upload, exporting them or updating my metastock file, automatic when I do my upload, and then when I update my symbol list by checking all, it will already know to go into metastock to update this so you can play all kinds of games with seasonality and others. Other things that I might be interested in doing with my industry groups. As I mentioned, I'm a big fan of John Person, and he has a thing, I do some things with him that I've had done personally that is not available yet in the program, but I could look for, running against my indexes, and I could look to see, and unfortunately I've got to have put a description in because you won't know what these are until I open up a chart. But I could look for, let's say if I want to look for things that are reversing. So high closed dojis are a reversal signal from a downtrend. And I'm looking for those that are occurring off of support. So his pivot support, here is a group. So retail, REITs, that's interesting. Not really in a downtrend here, but the retail REITs actually had, oh, because we're not at the end, we get to where we are today. My bad. Hold on a second. Let me start this over again. Well, I've not, this one. All right. So if I look at where we are today, we've been in a pullback. If I was to put my layout in for that, let's see if I don't want to go too far off the reservation on this presentation. I think I already am, so I probably will not push this issue here. Well, I'm looking for pullbacks in an uptrend off of support, and this identified, here's my signal, the high closed doji, off of support, pivot support. I especially care about monthly and weekly pivot support. Here's another one, equally interesting. What is this one? This is asset-based trucking. Again, I'd have to go back to HGSI to see what's in this, but again, it's off of a base with a potential buy signal with this candlestick closing above the high of the doji bar. Maybe I want to look at George Lee signals on an index. Hit the button, and now I can look for who's squeezing and who's got counter channel breakouts, who's got pocket pivots, MOBO breakouts, or PSARs, or who's got combinations of those. So the point here is this little trick of creating an HGSI, exporting it to Metastock, exporting it as a list into EDGERATER gives me a bunch of different things that I can do to manipulate my groups. Now, we're almost done. Let me show you how to create your boxes. If you believe that the market is near a low or at a low, then you might want to identify box stocks as something you might want to jump into. So I'm going to show you in about 5 steps how to do this. Open up your warehouse view. Go to all securities and put on something where all the stocks are showing. So scorecard, combo, no filter, all stocks. Now I need to create a filter, and that filter has to do a couple of different things. Here's the filter that I'm going to use. All I want you to do in your filter is put your close and your volume and your erg rank. Now, I kind of like what I learned tonight And so I'm going to duplicate that dollar volume greater than 5 million. And now I'm going to open up the new copy. And then I'm going to put, this is what I'm going to search on, and ERG greater than, say, 240. So if dollar volume is greater than 5 million, and I've got to find ERG. HGS ERG rank greater than or equal than, say, 240. Hit OK. Now, we'll close this thing down. So now I should be left with only those stocks who had a dollar volume traded greater than 5 million and have ERG greater than 240. So that's about 3 steps. Now I'm going to go into this pie. And this is spectrum analysis. I'm going to open that up, and right now it's just telling me that of my 165 securities, 70% are above the 50 and 30% are below. I'm going to find my HGS boxes. And I never remember where these things are. It's under fundamental earnings, HGS boxes. I believe if I went under all, I can find HGS boxes here as well. And now, let's see, make sure I'm doing everything right here. On custom slice options, let me get this straight. That's not doing what it's supposed to do. All securities. Oh, wait, because I'm still on that. All right. 1 second. My bad. All right. So what I've done here is I've divided my stocks, my 165 stocks, and I've divided it up into the various boxes. And this shows you, so I've got 10 slices, the 9 HGS boxes, and then the 36% of the 165 stocks that are not in a box. So these are the stocks that are in box 1, box 2, box 3, and so on and so forth. Now you see this little file cabinet where it says make groups from slice? Click on that, and they're going to call this HGS boxes. Thank you, Go Bananas, for the 5 million. And ERG greater than 240. And now I'm going to hit OK. And I'm going to realize it's going to take a few seconds. And now it's done. Now I'm going to go into my user groups. And I'm going to find what we just built. You know, I should have put a date on this, so let me go put a date on it. Well, I'll have to do that in my designer. Right-click, rename. So I got to put 8.11.14. And I can't click when I'm doing these. Here's the 8. All right, here's what's really cool. All right, take my name change. Come on. I click on that box. Here's box 1. Here's box 2. Here's box 3. Box 4. Box 5. Box 6. 7. 8. And 9. So what you can do now is you can start to maneuver, manipulate, and play with the stocks based upon the boxes. So what I wanted to do tonight was to show you some of the different things that you can do with sector rotation, using HGSI and using EDGERATER. To me, they're very complementary. I use them both during the day. One of the nice things about EDGERATER is that, and I closed it down, I think, if during the day I want to run George Lee signals, now you can't do it intraday on those indexes because those indexes are tied to HGSI end of day updates. But if I want to update any directory, so for example, let's say I'm doing Tradable Universe here, $2 and $1.50. And I run this tonight, and it's going through 3,000 stocks, and it's going to give me the signals for tomorrow. You can play around however you like to play around with this spreadsheet. This is great, but at 10 o'clock, I want what's new. All I got to do is click that, and it will do an intraday update, which takes only seconds on 3,000 stocks. So I'm able to use EDGERATER intraday to do my updates. So hope you learned something there. I post a video every weekend until I go to Australia for 3 weeks, in which case I'll take 3 weeks off. I try and teach how I use HGSI, but I also try and tell you what I think about the market. Even though I don't do this for a living and I don't consider myself a broker or a pro, I will talk about stocks that I'm interested in, why, and here's just the URLs. Thank you all. I think I got most of your questions. If there's any more, we can take them real quick. I don't know any program that trumps HGSI, and it's the integration you get by adding EDGERATER that just takes it to another level. Big fans of both. And where will this be posted? I will send a link to George Lee, who will put it out to his folks. I will also post it. I'll put it on the HGSI blog site, and my YouTube site will be up probably in about 2 hours. And thank you all for coming on. And let's see what the futures are before we say goodnight. I just think that this is so news-driven. Although, unless something blows up, I mean, sometimes you're just plain lucky. And go back and listen to last week and 2 weeks ago and see if I didn't talk about this Intercept Pharmaceuticals. I'll wake up tomorrow, it'll probably be $200, but right now I can feel a little bit richer. On that note, I think I will say good night. Make sure there's no other questions. And hopefully you guys can, let me just put this up here. If you like this stuff and you want to learn all about what I do, what Person does, 2-day meeting, and his registration fee includes 1-night hotel. It's on the beach in paradise. I kid you not, it is paradise. I live 2 doors down from the hotel, so I live in paradise. George Lee, who I learn from all the time, 3rd through the 5th. Fix my slide. Contact Greg or George, and then the upcoming PB meeting. On that note, I'll say goodnight, and thanks, everybody. Bye-bye.